Hi guys, welcome to Dominion Wealth Zone. My name is Julius Olutokun. Welcome to another episode on this telecast tonight. Please sit and relax and enjoy this. Tonight, I'm going to be talking about the difference between assets and liabilities. I'm going to be talking trying to define for you, making you to see the difference between your assets and your liabilities. If your liabilities are weightier or heavier than your assets, then you're running a risk. You are running an imbalanced financial life. In other words, your assets must outweigh your liabilities in order for you to be able to generate returns or to have positive returns. What are assets? That's the first thing we need to know. What are assets? Assets are things that you own that add value to you, or things that put money into your pocket. Anything that generates money into your pocket is your asset. Now, let's put it like this. You might have two houses. One might be a liability and the other one might be an asset. I'm going to define for you. Because a lot of people always say, oh, my house is my asset. No, it might not be your asset. Let's say you are a couple with a child and you live in a 5-bedroom house. And the mortgage payment for that 5-bedroom is about $1,500 per month. And you have another property that is a 1-bedroom house, just 1-bedroom house, with a mortgage of about £500 a month or £700 a month. That 1-bedroom house is an asset, while the 5-bedroom house that the three of you are living, to me, is a liability, because that house you're living in does not generate money for you. As a matter of fact, you are paying more than what you need to live. So that's a liability. While the house that you rented out, the 1-bedroom house, you're getting about, say the mortgage is about £700 and you're renting it out for about £800 or $850. So you get about £100 or £150 on it. Take your insurance out of it, so you're getting about £130 or say £100 a month. That's an asset because it's an income generation thing or income generation material or item onto you. However, in the long run, listen to me very well before you start taking me on. In the long run, the house you live in might turn to become an asset if it appreciates in value. But at the moment, I call that a liability, because you're 3 people, you don't need a 5-bedroom, you need a 3-bedroom or 2-bedroom rather, or max a 3-bedroom, because as a couple, you live in 1 room, you have 1 room for your child, and you have a guest room, if you need one at all. You understand? So your house could be an asset, and it could be a liability. Let's look at examples of assets. You want to look at this. Do I have this in my life? Do I have them in great amount, great quantity, or do you have them in low quantity? If you have your assets in low quantity or quality, and your liabilities are more, then you have a problem. Number one asset that everyone needs is their cash. Cash is number one asset. Everyone needs cash. We say cash is king. If you have cash, you can negotiate. If you have cash, you can scale up your business. If you have cash, you can plan. If you have cash, you can leverage on what you're doing. You can increase the momentum. You can do more adverts. You can expand your business. Cash is very fundamental and very important. That's why we take business loans. That's why you take mortgage in order to get cash to finance the houses you want to buy. Also, cash is number one asset. The second asset is real estates that generate rental income. Not every real estate. You could have a real estate, say you have a holiday home somewhere. I've always told people that you have a holiday home, you go there once a year or twice a year or 3 times a year or 4 times a year. Why not rent it out or put it on your short-term rentals? Or why not rent it out on a short-term period, 6 months is out, or you make it an holiday let, you understand? So that you turn that asset or that thing that should be a liability, that is your holiday home, you turn into an asset and it generates income for you. So number 2 asset is your real estate that generates income. Number 3, financial investments or money market investments, like buying stocks, bonds, mutual funds, shares, ETFs. These are assets. Now, if you have £20,000 and you put that £20,000 in an account, and that account annually gives you 1% or 0.5%, or banks are coming out now and they say, oh, we're going to give you 2%, 2%. If you put that into an ETF, I know, I'm sure, I would say 100% sure, I know some ETFs or some stocks investment that are FCA regulated. FCA is the body that regulates financial activities in the UK. That if you invest in them, at least you get about between 8 to 12% returns a year. That's an asset. You understand? So instead of living in a place where you get 1 or 2%, you put in a place where you maximize your return and get between 8 and 12%. So your investment, your stocks, your ETF, your mutual funds, your bonds, these are all assets. Another asset I'm going to talk about is a business ownership. You have ownership of a business where that business generates income for you. Now, a business is something you have set up and you have put a system in place to work, either you are there or you are not there. So that business, if it generates incomes for you, is an asset. Of course, I know some businesses take money out of people's pocket. Those are liabilities, so you need to watch out. It's not every business that generates income. Some take money out of your pocket. Next one is intellectual properties. What are intellectual properties? Like your book, your patents, right? Those are intellectual properties. You sang a song, and then you put that song online on Spotify, and then people have to pay on some other paid platform before they listen to your song. Those are assets. And assets, like I said, they generate income or they give money into your pocket. Benefit of assets is number 1, they increase your net worth. They add value to your net worth. Assets generate income. Of course, I've talked about. Number 3, assets put money into your pocket. And number 4, assets improves or makes your portfolio to become healthy. Now let's look at liabilities. What are liabilities? Number 1 liability are consumer loans. I said consumer loan, but I'm still going to go to business loans. Consumer loans are loans that you take in order to spend it on yourself. You've taken a car finance for yourself, it's consumer loan. I have one of my beloved ones who took a car loan, a car for about £5,000. After 4 or 5 years, she ended up paying about £9,000 or £8,500. You understand? By the time she finished paying, the car value has gone down to about £2,000. Remember, she bought it for £5,000. Value has gone down. I need someone who took car loan for £8,000, 5 years. He paid about £13,000 or £14,000. By the time she finished paying, or he finished paying, the car value has gone to £2,500. So therefore, our car loans generally are liabilities as consumer loans. Second ones are business loans, if not managed properly. If you manage your business, that's why I advise people, don't take loan for business until when your business is stable. Don't take loan to start a business. No, you're going to mess up. It will never work because you're going to be under prayer in order to make it to work. But once the business works, you can take loan to scale it up. You understand? So business loan could be or it's a liability anyway. It's not an asset, it's a liability. But you could convert that into an asset. Number 3 is credit card debts. Credit card debts. I've always told people that you can leverage on credit card. You can use credit card spending before the month ends or before the time that you're supposed to pay interest on it comes. You repay that money back. Then take it out the following month. We'll call it credit card arbitrage. I've done a teaching on that previously. However, when you amass credit card debt and you're paying about £400 interest, £300 interest. I used to be in that position. I was owing about £10,000 or about £11,000 on my credit card, and I had to pay almost £250 interest every month until I told myself, this is not the way forward. I need to change. So credit card could be a liability. Number 4 is unpaid bills. When you don't pay your bill in the UK, your name or your details will be passed on to credit reference agencies. And once they have your credit, and once they have your details, they'll begin to write you. If you don't pay that debt, after a few months or years, your details will be passed on and you could get a county court judgment against you, what we call CCJ. Once you have a CCJ against you, for 6 years, you will not be able to take any credit, which is very awful to you if you are in that position. So, credit unpaid bills could affect you. It could even be your council tax bill. You could be jailed for not paying council tax bill. And funny enough is a lot of people, they have, let me warn you on this, they have driving or parking ticket and they refuse to pay it. I've seen someone who did not pay a parking ticket of about £60 who came to me and I looked at it, and that with the interest on it and the county court, all this, everything went about £3,000 from £60. It's better for you to pick up a phone, call them. £60, I cannot afford it now. I'm going to pay it next month. I'll pay it in 2 months' time. I'm struggling. This is what I'm passing through. Talk to them. Don't shy away from it. You understand? Don't shy away from it. A mortgage could also be a liability. If it costs you money instead of making you money. I've mentioned that when I was talking about asset before. Mortgage could be a liability. So a liability is what you hold. A liability reduces the value of your income. A liability is something that takes money out of your pocket instead of putting money into your pocket. A liability decreases. I'm just talking about the advantages now, or disadvantages of liability. A liability decreases your net worth. It decreases your value. A liability, like I said, takes money out of your pocket. A liability makes you stressful, causes stress. A liability makes you to have a burdensome financial obligation. So that's the difference between asset and liabilities. Ladies and gentlemen, if you want to be rich, you want to be wealthy, you need to be thinking, how can I create more assets and how can I reduce my liability portfolio? Of course, all of us are going to have, in one way, shape, or form, some liabilities, but you can minimize them, you can reduce them, you can avoid those luxury things, those high-end jewelries, you can avoid them, those luxury furnitures, you can avoid them. I mean, life is in phases and men are in sizes. Your time is coming. There's a time you'll be able to afford them, but as of now, if you cannot afford it, avoid it. Thank you and see you in the next episode.